After propelling through the 1300 mark and rising 1% on Tuesday, gold is back down again, still above 1300, but it has retreated after hitting that 11-month high. So why is gold safe haven appeal so here today but gone tomorrow? Why can't it stick? Joining me in studio today is the best-selling author of Currency Wars, Jim Rickards. Jim, good to have you back in studio.
Good to be with you, Danielle.
So here today, gone tomorrow. That's how a lot of people would sum up this recent gold rally. We saw what the news out of North Korea did for gold. Why does it seem that some geopolitical tensions have more impact on the metal than others?
Well, there are two things going on. One is, you're right, the pop on Friday had to do with this, and earlier this week had to do with this missile, and then people are saying, well, okay, it's not World War III, no one's dropping any nuclear bombs, so it goes back down again. I don't quite understand that reaction. This is a very serious threat. We're heading for war with North Korea. I don't know what it's going to take to get not just gold to go up, but stocks and other markets to be affected by it. People seem to have very short attention spans. They go, if war's not breaking out today, it's all good. That's not how I think about it. I'm just looking down the road. You can see the war is coming. Kim Jong-un is not deviating from his path to get ICBMs and nuclear weapons. The U.S. will not allow it. There's no middle ground there. It would be great if we could have diplomacy. I think we should ratchet up sanctions on China, but I don't see any of that happening. So we're on this path to war. But having said that, gold goes up to 1320, back down to 1311. People go, why doesn't it stay up at that high? Look, there's a little bit of profit taking. Don't underestimate the extent to which gold is not just gold buyers. It's also hedge funds are in it, leveraged players are in it. They don't really care if it's gold, soybeans, or coffee beans. I mean, to them it's just another commodity. So if they have a nice profit, they'll take profits. They have tight stops. It goes down a little bit, they have to sell. But the bigger picture, the one I'm looking at is, gold hit an interim low on December 15th, about $11.28 an ounce, $1,128 an ounce. It's been grinding higher ever since. It's up over $200 an ounce. It's the best performing asset, one of the best performing assets of 2017. Now, it's been up and down, but there's this pattern of higher highs, goes up and down, up and down. But every time it goes up, it goes a little higher than the time before. That's a very positive pattern for gold.
But it always comes back to the U.S. dollar, though, right? Whenever there's a direct threat to the U.S. dollar, don't we really see that rally happen more so for gold?
Well, now you're into the currency war. It's a very good question, Danielle. When people say the price of gold, see, I think of gold by weight. I say, how many ounces, how many kilos, how many tons do you have? That's how I think about it. But most people talk about the dollar price of gold, but you're kind of privileging the dollar. You're saying the dollar is the way to count everything. Well, you can count gold in euros, you can count in Bitcoin, you can count in Japanese yen. So I think of gold as money. I think of the dollar as certainly money, the euro as money. These are all just cross rates. So when I see a higher dollar price for gold, I just think that the dollar's weaker. Likewise, if I see a lower dollar price for gold, I say, well, gold's constant, the dollar just got stronger. So what's really going on now is, well, three things are going on. One is the fear trade that you just mentioned. There's some technicals involved, supply is short. But the third thing is we're seeing a weaker dollar. That means a higher dollar price for gold. So if you want to know where the dollar price of gold is going, ask yourself, where's the dollar going? Dollar's going lower. It has to, because Yellen has tightened into weakness. We're getting disinflation, not inflation, and so she needs a weaker dollar to get some inflation.
I think you mentioned it's important to practice patience, especially when you're following gold here. But from what I'm hearing from a lot of investors is they want to see that 1900 gold again. They're saying, why is it different this time? Why can't we have that continuous rally here?
Well, I had a very good conversation with Jim Rickards. You know Jim very well, probably the greatest commodities trader of all time. And he said to me, nothing goes to the moon or to some, but we both expect to see it at $5,000 or $10,000 an ounce. And I stick to that. Gold is going to $10,000 an ounce. Maybe not tomorrow, maybe not for a couple of years, but that's the fundamental price of gold as money. But what Jim said to me, he said, nothing goes to that level without a 50% retracement. So when he saw gold go to 1900, he thought that was a little bubbly. By the way, I started buying gold at 700. I have friends who started buying at 200, so good for them. I started buying at 700. I kind of dropped out around 1375. This is back in 2011. That spike from 1500 to 1900 happened very fast, and it looked bubbly at the time. But what he said is everything retraces 50% before it resumes its path upwards. So using 200 as a base, 1900 as a spike, 50% retracement would put around 1050, which it did hit in November 2015. So it looks like it's performed that retracement. Now it's on its way back up again. The question is, what are the catalysts to take it higher?
Could one of the catalysts be Bitcoin? Is it stealing gold's thunder?
I don't think so. I mean, Bitcoin's a very small market cap compared to gold. To me, it's a little sandbox. People can play in their Bitcoin sandbox if they want. I don't really think it has much impact on gold one way or the other. And Bitcoin looks like a bubble. By the way, I've been on Wall Street a long time. There's certain, tricks of the trade. I mean, basically frauds of various kinds. So there's paint in the tape, wash trading, Ponzi's, ramps, pump and dump. There are all kinds of schemes people do to kind of get things up and dump it on the suckers. I'm seeing all of them in Bitcoin, all of them at once. There's good forensic evidence that there are people doing wash sales. Like you and I could sell Bitcoin back and forth at 4,000, 4,100, 4,200, 4,300. There's no profit and loss because we're selling it back and forth to each other, but we can paint the tape upwards. The suckers don't know they're getting sucked in.
So gold's still the ultimate safe haven for Jim Rickards?
Yes, it is.
Thank you so much for your thoughts today.